In this video, I'm going to be talking about 3 high dividend ETFs that you should place on your watch list right now. Welcome to the channel. I'm Nick, and on this channel, I basically cover ETFs and safe investing following principles from Warren Buffett. My personal goal on this channel is to make investors aware of all the possible ETFs available for their own analysis and possible investment decisions. Now, starting off with the first ETF on the list, we'll see ticker SPHD, which is the Invesco S&P 500 High Dividend Low Volatility Portfolio ETF. Now, this ETF in its name already shows us some features like being focused on the 500 big companies in the US, having a high dividend yield, and having a low volatility or a low risk compared to some other ETFs. I typically start out my analysis of any ETF by checking out the 10-year performance, which in this case is 81.15%. And over the last 5 years, the ETF has also seen a positive return of 12.83%. It's also interesting to see that the ETF has a dividend yield of 3.73% and has a positive dividend growth rate over the past 5 years at 0.26%. Now guys, as I mentioned earlier, this ETF pays a dividend on a monthly basis. But of course, as is expected, the ETF also has an expense ratio, and in this case, it's at 0.3%. Now, that expense ratio is slightly higher than the asset class median of 0.29%. The investments in this ETF are basically spread in the utilities, consumer defensive, and healthcare sectors, which occupy the top 3 positions. Names in this ETF include Williams Companies, Ultra Group, Kinder Morgan, AT&T, Chevron, Verizon, and other companies like this that tend to pay out high dividend yields and are in the S&P 500 listing. So by and large, for this ETF, I see an ETF that has a positive 10 and 5-year performance. I see an ETF that is quite small in asset under management. That's just a $3.2 billion mark. I see an ETF that has a decent dividend yield upwards of 3% and that pays a dividend monthly. So this ETF has floated to the top of my watch list at this time. The second ETF I want to discuss today is ticker SDIV. That's the Global X Super Dividend US ETF. Now I'll take a pause at this time to state this. Whenever you look at high yield ETFs, always bear in mind that that high yield could be offset by negative capital performance. Okay, you could see a capital loss even though it could have a positive dividend yield. Now in this case, this ETF has a 5.42% dividend yield. However, when we check the 10-year performance of this ETF, we will see a positive picture at 51.47%. So this is one of those instances where the yield is quite decent and the ETF also gives a positive return. Now, narrowing down the horizon, you'll see over the last 5 years, the ETF has a negative return of 17.32%. It's always good to look at those kind of numbers and performances and not just get carried away by the dividend yield. Now, it's not just that the dividend yield is at 5.42%, we're also seeing a negative 5-year growth of minus 7.91%. The ETF has an expense ratio of 0.45%, with an average median of 0.29% that shows that its expense ratio is higher than what we see in its asset class median. And when we check the holding breakdown on this ETF, we'll see an ETF that is pretty much diversified across real estate, energy, utilities, consumer defensive, and industrials, with names like Iron Mountain, Lumen, Knot, different kind of names, Kraft Heinz, Shell Midstream Limited Partnership, companies that typically have a high dividend payout. So in summary, the main thing going for this ETF is the high dividend yield. But like I mentioned, you must also bear in mind that the capital appreciation might be negative when you invest in this sort of ETF. At this time, the attraction for me in this ETF is that the market is down, just like the recovering, and most of the prices have declined. So that helps me get some of these ETFs at reasonable prices because again, my horizon is very long term. So by and large, if you're an investor that likes high dividend yield and you intend to wait out the fluctuations involved in any of these ETFs, then this is one of those ETFs that might be of interest to you. Now, before we talk about the third ETF on this list, bear in mind that this is not financial advice. I just share personal opinions and tell you what I'm doing and not give you any sort of financial advice whatsoever. Now, the third dividend ETF I would like you guys to see that pays out dividend monthly today is ticker SDIV. That's the Global X Super Dividend ETF. Now, the former one focuses on the United States, whereas this one focuses on the globe. I must put a caveat out there that this ETF is one of those ETFs that attracts investors that like high yield. So if you're an investor that is focused on high yields, not caring about the fluctuations in the price of the ETF, then this is one ETF to consider. However, if you're an investor that looks at both the yield and the capital appreciation, then this ETF may not be a very good one for you. Check out the 10-year performance at negative 49.6%, a whopping nearly 50% decline in the value of the ETF. And over the last 5 years, we've seen a 47% drop in the value of this ETF. That's perhaps accounting for why the yield is this high at this time. The ETF has assets under management of 858.91 million and has an expense ratio of 0.58%, which is quite huge. Bear in mind also that despite the 10.87% dividend yield, we have seen a 4.58 negative growth over the last 5 years. And drilling into the holdings breakdown, we will see that real estate accounts for 44.57% of this ETF, nearly half of this ETF, with 11% being in financials and about 10% in energy. So it should not surprise you that this ETF is exposed to different countries across the world. We see China, we see the UK, we see China again, different companies all across the world. One of the reasons why this ETF came to the list today is this. The entire stock market has seen a huge pressure lately and the price has really dropped significantly. The main question to ask is, will this ETF be able to sustain its dividend payout at these levels? Now, if that is possible, then these yields look interesting at this time. But again, the share exposure to the entire globe is another factor that I like personally in terms of the diversification benefits. So by and large, that's what we have for this top 3 dividend ETF video. But let me know in the comment section what you think about these ETFs. Do you think they are ETFs that are risky? Do you think they are ETFs that should not be invested in? Let me know your thoughts in the comment section. Once again, this is the Nick Finance Clips channel where we'll talk about ETFs and safe investing. Thanks so much for watching and see you again in the next video. Cheers.